JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 18th of June 2021. So yep guys, welcome to this last Traders Tea Time this week, and well, for the time being, I believe. So yep, of course we're not going to continue with the tea time no more for now. I don't know if that's going to change or not, but let's say if we just take it at this point in time, as we do with sometimes with our charts, then yes, at this point in time, yes, we're not going to continue with the Traders Tea Time, but we'll continue with the espresso, so you will be able to catch me every morning at around 6 o'clock GMT time. So yeah, for my morning espresso, where we're gonna also have a look at the charts. But yeah, guys, before we jump into this session, as always, let's quickly have a read through our risk disclaimers. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so, yep, I can see in the chat room here, Erica, good afternoon to you too. I hope this week has been a good one to you in terms market-wise, well, or in general. In general, it was. I hope it was good for you. But in general, guys, I hope for everybody this week was calm, or should I say, at least calmish. At least kind of you were able to maybe calmly approach the markets, because that should be our main goal sometimes. So now, quick mentioning, of course, as always, of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, of course, and yeah, our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, check us out here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts. So let's see what's happening here with the markets, and boom, there we go. We've managed to break the lower side of the rising wedge here, and as I mentioned before, these patterns tend to be seen as bearish indications. However, until we get that clear break, we cannot really get comfortable with the downside. Well, hopefully, of course, so let's see how this is going to play out, but hopefully this is going to stay below this lower side of the rising wedge, and it's not going to result just as a false breakout. But if it stays below this, and most importantly, if it stays below the 21-day EMA here today as well, then, well, I mean, further declines could be possible, and this is where I'm going to aim for that 15,477 territory, or this 15,350 level. That was these were my two levels that I was talking about this week. So yeah, so far we're on the right track, and yeah, let's see how this is going to play out. Don't get me wrong, I mean, it doesn't mean that from here it's just going to be downwards and that's it. No, that's not the case, because don't get me wrong, I mean, we're still trading above some of these upside lines as well. So in a way, on a bigger picture, this move lower could still be seen as a temporary correction before another possible leg of buying. So keep that in mind. Jumping into NASDAQ. Oh, by the way, very quickly with the German index, for the upside, well, I mean, for the upside, I would need to see this one climbing back above this little barrier. Let me just adjust this. Above this little barrier here, the 15,732 zone, somewhere around here, and then yes, we could consider maybe a move higher. However, don't get me wrong, I mean, I might reevaluate this again depending on how this is going to trade, but at the moment, yep, that's the case. NASDAQ 100. So yesterday we've created a new all-time high on NASDAQ, and if we take a look at the cash index right now, let me just very quickly jump into that one. We'll see a nice, beautiful reversal. We're currently sitting after we created a new all-time high here. Let me just grab this line. We've hit the 14,205 zone here during the main trading hours, and yes, now looking at the cash index, we see that decline, and we're currently trading at around 14,090 zone. So basically, we're below even the previous all-time high, which was around the 14,129 zone. So long story short, basically we're still somewhere in this little territory right here, above this upside line, but below the previous all-time high. So let's see how that's going to play out. But if, to be honest, I mean, for me to get comfortable with the downside on this index, I would need to see a nice good break of this short-term upside support line taken from the low, the 19th of May, and then yes, the lower levels could be met, guys. For the upside, basically we'll keep an eye, of course, on this upside line. If it provides good support, then yep, a rebound could be possible. But to be honest, at this point in time, I would rather wait for a move back above the 14,129 territory right here. Then, of course, I'll aim for this all-time high. But if that gets clear, then this is where it could become a little bit more interesting for more buyers. DXY, the dollar index, so continues to slowly grind higher, and yep, we've managed to overcome yesterday's high near the 92 zone, and we're currently still trading above it. Now, of course, don't get me wrong, the day's not finished. We still have a few full US session to go through, so that's why I'm keeping an eye on this 92 territory. If by any chance the daily candle ends up dropping back below it and stays below it, then yep, this could mean that maybe we could go for a bit of a larger correction, or not a larger correction, but we could go for a bit of a correction to the downside going into next week. I would get a little bit more confident with that scenario if we would see the daily candle ending the day today below the 200-day EMA, and then yep, we could see a bit of a corrective move lower here. But so far, everything's looking quite positive. Don't get me wrong, this rally will eventually stop, but at the moment we cannot really, let's say that, you know, from here it will reverse and correct lower. No, it might continue drifting higher. It might even continue traveling towards this area right here, towards this downside line, taken from the high 25th of September of last year. But yeah, again, for now, let's go step by step on this one. It already did have a nice steep up move here. Certainly we are due for a bit of a corrective move lower, but will we get that? Let's just wait and see. So now then, jumping into gold here very quickly. So gold is of course reacting to the whole kind of stronger dollar issue here, and yep, initially we had that little correction here to the upside, got a hold up near the 1797 territory, 1797-98 zone, and then yes, we have drifted back down. So don't get me wrong, I mean, depending on how this is going to end up being today, yep, we might see maybe a corrective move here higher going into next week. So let's see how that's going to play out. But for now, I'm still going to keep an eye on this little scenario here. But of course, everything will depend as well on today's trading activity here, and if by any chance we suddenly start dropping below the 1764-65 territory right here, well, maybe we could skip the whole corrective move, and we could start aiming for that for this upside support line straight away. And this upside support line is drawn from the low of the 20th of May of 2019, guys. Now, jumping into WTI Oil. Oh, by the way, Evo, I can see in the chat room here. Hello to you too. Jumping into WTI Oil. Yes, we broke the upside line again. Can we stay below it? That's the question. I mean, yes, we're currently flirting with this upside line. We're breaking it again, but can we stay below it today? Well, we'll just have to wait and see. For now, I would say that yes, there is a possibility of seeing that, especially if the dollar continues to rise. But if the dollar decides to take a pause, maybe, then we could remain above this upside line. So probably don't rush into those shorts, guys, because again, this all could still kind of change a little bit. So again, don't get me wrong. I mean, don't forget that, by the way, that the oil market is right now on the stronger side. So yep. So let's see how this is going to play out, of course. But for now, we will be keeping an eye on this upside line. If we stay below it, then we could consider maybe a larger correction here to the downside. Bitcoin. So Bitcoin is, well, first of all, it broke this upside line taken from the low of the 8th of June, but don't get me wrong, this was a tentative line, so we just had it on the chart here, but now we can get rid of it. Now we're going to, what I'm going to focus on here is this little downside line taken from the high of the 20th of May. In a way, if it continues, for example, to act as a nice area of support, then we could see a nice rebound here and a push higher, maybe back towards this 200-day EMA or this 41,322 territory marked by the current highest point of June. And of course, yes, if that gets cleared, then yes, this will confirm a forthcoming higher high and potentially higher levels could be met. But at the moment, we're watching this downside line because, again, we've seen this happening in the past where, for example, the crypto drifts back down towards to the line that it broke, basically the downside line that it broke, and yep, it continues kind of, let's say, to drift lower, but only above this downside line, and then at the end, I mean, the bulls pick up and kind of use it as a nice trampoline here, and yep, we see a nice rebound here and a push higher. So, but again, that's what happens sometimes. We've seen that, like I said, happening before, but let's see if that's going to be the case again. However, if we drop below this downside line and we fall below the 34,635 territory, somewhere around here, marked by the low of the 12th of June, then yes, we could start examining the downside again. NZDCAD. So this one's interesting because finally we are breaking this hurdle, the 0.8635 territory. I talked about this level, and basically I said to you that in order to go for lower levels, wait for that break. Now the big thing here is to see if we're going to get a daily candle staying below this area, because if it's going to travel back above this level and then stays above it, then we'll just get a nice false breakout. But if we stay below it, then of course, yes, lower levels could be met here, and then we could start aiming for, let me just have a look here, and of course, straight away, then this is the lowest point of August of 2020, near the 0.8577 territory, and yes, this could be our next target if the rate today stays below this 0.8635 zone. GBPCHF. So GBPCHF is testing and flirting with this barrier, continues to do that, and yep, this is becoming a little bit annoying, to be honest, but nevertheless, that's part of the game. So yep, we'll just remain careful, cautious. Today we did get a break through that level, but as you can see, once again, we just got a tease, and we now drifted back down. However, with the downside, I'm not saying that there is now becoming bearish, because we're still above this downside line. Again, let's see if that's going to be the same scenario as with Bitcoin, if we're not going to use this downside line as a nice kind of bouncing ground eventually, because currently the rate is still trading above the 21-day EMA. So let's be very careful, cautious here, guys, and let's see how all this is going to play out. But for now, I'm cautiously bullish, but I need that breakout here. I need that daily candle to stay above this highlighted area right here, near the 1.2790 zone right here. Euro NZD. So we're popping nicely through this highlighted territory. I spoke about this pair a while ago. I don't look at this one very often, but to be honest, sometimes probably I should look at this one very often. And now we're seeing this push through this highlighted area, and yep, we're breaking this 1.7037 territory, the upper side of this resistance area, Can we stay above it? That's the big question, because we previously did break it as well, but we ended up being, ended up having a false breakout. So can we do that this time? Well, we'll just have to wait and see. If we stay above this area, then, well, I mean, we could start aiming for some higher levels here, then yes, we'll take it from there, of course, as always. But at the moment, I mean, there are a bunch of levels to keep an eye on, but I mean, don't want to overcrowd the chart, but basically, yeah, we can keep an eye on these peaks here. The high of the 4th of January, the high of the 28th of December, and the high of the 22nd of December. So, and then, yeah, we'll see what he wants to do after. And finally, EURUSD continues to slide. We didn't really get that drift lower, but as I've mentioned to you this morning, that in case we don't get that corrective move here to the upside, keep your eyes on the yesterday's low, which was around the 1.1892 zone. As you can see, we have managed to drop below it, and I said that my next target is going to be this 1.1861 territory. Just fell shy by a few points from reaching that, but to be honest, it's a good result here, so yeah, well, I'm quite happy. So nevertheless, the idea worked out. Now I want to see how this is going to play out next week. Maybe we could get a bit of a correction here to the upside, but even so, if we do get that, then all eyes are going to be on the 200-day EMA initially, together with this 1.1943 zone. If that provides good resistance, another slide here could be possible. If we continue to slide here today, then of course keep your eyes on the 1.1861 territory. If that gets cleared, then, well, I mean, we could maybe aim for something right here, near the high of the 29th of March and near the low of the 6th of April. So this level, the 1.1794, could be our next target. But of course, yeah, be very careful for now. I doubt that we will drop all the way here unless something really and something really drastic happens, but yeah, guys, let's see how that's going to play out. Evo, yes, I can cover that one. To be honest, let me just quickly jump into that one right now. I'm going to put this into my list here. So, yep. So I'll pick up on that one right now. But yeah, in terms of EURUSD, certainly, yes, there is still bearishness here, and but don't get me wrong, it's we need to have a bit of a corrective move here to the upside, and then we could go maybe further down again. But at the moment, yeah, it is how it is. We have reached this area here, so it might balance here for today, somewhere around here, and then maybe going into next week we could see some maybe correction here to the upside, and like I said, then keep your eyes on this 200-day EMA. USDCAD. So this one, to be honest, well, it's breaking right now, this downside line. So I talked about this one before. So this downside line here, taken from the high of the 19th of March of last year. So in a way, everything's looking quite positive here. However, we have seen this before. I mean, you have seen yourself that sometimes when we get these nice breaks here, but then at the end of the day, it still kind of reverses and pushes lower. My issue here with USDCAD, don't get me wrong, I mean, it could go higher, certainly, and it does have good potential to go higher, maybe even going all the way here towards the highest point of April here, near the 1.2654 zone, or maybe even better, this 200-day EMA. But the area that we are right now in, first of all, we broke the downside line, we traveled higher, but we found resistance near this 100-day EMA. So if this is too much for the bulls to overcome this week, we might see maybe this daily candle, for example, today ending dropping back below this downside line, and if that's the case, then of course we might consider maybe a bit of a corrective move lower here, maybe back towards this 1.2266 territory. Of course, then we'll have to pick it up from there, see if it doesn't want to go for a bit of a larger correction. But like I said, for now, yes, I wouldn't really go like, let's say, crazy right now with the upside, because we had a decent run. This pair there. Yes, it does like to do these strong moves sometimes, like for example here to the upside, like we had in March, in the beginning of March of 2020. But if you remember, here, for example, we had oil really strongly depreciating, and this had a strong effect on the Canadian dollar, and we saw it devaluating very strongly. Oil is devaluating right now, but not as strongly as it is here, for example, as it did in March. That's why I don't think that we could see a strong rapid move to the upside like we did here back in March. So that's why I'm saying that it might be a little bit more normal trading here. So if it is normal trading, then we might see a bit of a corrective move back down, because as you see here, for example, historic price data, it just, yes, it moves higher, but it has an outburst, but then it corrects back down. So keep that in mind, guys. I mean, that could be the issue here. So we might see this one, yes, trading right now at above this downside line and above this barrier. But if by the end of the day it comes jumps back here, or not jumps, but falls back below this downside line, then maybe we could see a bit of a corrective move here lower. So again, it's one of the scenarios. Of course, don't get me wrong, we'll just have to wait to see how this day is going to end, and then position ourselves correctly for next week. In terms of next week, just a quick reminder, on Monday there won't be any Traders Espresso. We'll resume on Tuesday, but basically, yeah, that's the kind of situation right now. So but yeah, guys, I hope that was useful. I hope you found it useful. Quick question I can see here from Evo here, why there's a strong relation to Evo? Well, basically the whole Canadian economy is heavily dependent on oil. The same, for example, with Russian market. So whenever oil strengthens, you can see, for example, the Canadian dollar and the Russian ruble strengthening. And basically, for example, if I'll quickly have a look at USD ruble here, for example, you'll see that yes, we have been drifting nicely here to the downside, because although not only because of the weakness of the dollar, but also of the oil market strengthening. So yeah, guys, for example, here when we saw this kind of drop, the drop in oil at the end of February, beginning of March last year, you can see the acceleration here of USD against the Russian ruble here, and the Russian ruble just devaluated against the US dollar, and then it kind of, once oil started stabilizing, and it started drifting back down. So these things you need to kind of keep in mind. But yeah, that's kind of the little case here. So yeah, guys, thank you very much for watching and listening. I really appreciate your time. I hope you enjoyed tuning in to Traders Tea Time. I hope you will continue enjoying tuning in into Traders Espresso. Like I said, we'll resume on Tuesday. But yeah, have a wonderful weekend. Stay safe, guys. Today, don't overtrade. If you are still in some trades, well, try to get out of them, guys, and try to just enjoy your life. Basically, trading should accompany your life, not be a main issue for you guys. So yeah, don't overtrade. Have your stop loss in place as always, and everything will be fine as always. So thank you very much, guys, and bye bye.